All right, guys. So this is a little snapshot into how trend lines can work. It's by no means comprehensive, but it'll be interesting nonetheless, I'm sure. So this is the 1 day chart for HYMC, which I traded today. This is the pre-market. Right here is the start of the day. Right here is the end of the day. And this is the aftermarket. So I made a trade earlier on, but we're going to ignore that for now. I'm just going to talk about this one here near the end of the day. So what I noticed, first of all, is in this expanded view, the pre-market low and the low in the midday happen to continue on and create a diagonal price floor, which the stock keeps bottoming out at, and it can't get any lower than. The same thing is true in the upper range. So this here is a little wonky here, but then it creates a peak right there, which goes peak to peak with that one there, and peak to peak to peak with this spot right here. And so at this point, you can just be reasonably sure, okay, well, the chances of a trend line exactly lining up with 3 or more bottoms in a row is 0. Like it's clearly intentional. It's telling you that people are holding it above this trend line, above or below, and in this case both, above and below the two trend lines. And then what we have here is this horizontal line is just a resistance or support line, meaning that when it reaches this line, it's telling buyers and sellers that this line is like a battleground. It's contentious. So right here, there's a low of the day, and then later on that becomes a resistance point, and then near where I bought in, it is still a resistance or support line. So it's not getting lower than that line. 3 times, it's not getting lower than that line. And then a 4th time, it once again could not get lower than that line. But on this 4th time, it also converged with our diagonal trend line here, which it could not get lower than either. So it's almost like there's double support for this holding up here. It's like it has to break this line, which already has a reasonable track record of holding, and it has to break this line, which also has a very reasonable track record of holding. So the chances of getting this through both of them is just a little lower, or it just induces a little bit more fear to people that are betting against the stock, betting that it goes down. So when it tries to and it holds, that tells people that are betting against the stock probably time to get out. So they have to buy in because they had already sold high. They have to buy in order to clear their position. It's called short selling. And so that causes the stock to rise a little bit because they start buying in. And then that tells people that are for the stock, that are rooting for it to go up, that maybe it's time for them to buy in because it's starting to go up a little bit. And when it breaks this trend line, which so far it has never been able to go above, that is a really good sign because now it's like, well, what is holding this thing back at this point? As far as we can tell, nothing except maybe this red line here, VWAP, volume weighted average price. So what I notice is there's probably going to be a test at this area and it's probably going to hold because it's looking pretty good and the stock is up on the day. It's pretty bullish, pretty optimistic. So I buy in anticipation of that test. I could have bought a little lower, but anyway, it holds and that creates this big spike, and then I sell into VWAP because I like to sell into VWAP because a lot of times it'll go to VWAP and then it'll fail. And I can always buy back in later if it does hold VWAP. In this case, I didn't because it was close to the end of the day. But anyway, that's just a little snapshot on how trend lines can give you a picture and help you know when to react to situations. And it'll explain why there will be these seemingly random spikes sometimes. It's usually because a trend line was broken. So yeah, I hope that is informative to some degree. All right.